Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? That basically you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable Investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Clement, and today we have with us Pablo Gonzalez, who is working with JWB Real Estate Capital out of Jacksonville, Florida. They are a one-stop shop for all turnkey single-family rental type of investments. So I think it's going to be really interesting diving into this. Let's just jump into things. Pablo, how you doing?
I'm doing awesome, man. Thanks for having me. I'm super pumped to be here.
All right, perfect. So why don't we just discuss how you got involved with JWB and just your overall real estate journey?
Yeah, man. So the first time I got involved with JWB, so one of the two co-founders of JWB went to my university, right? I went to University of Florida in the early 2000s, late 99, early 2000. And one of my best friends from college, they had started doing private lending with them. And at some point we got this WhatsApp group with a bunch of friends, and they're like, man, I'm getting this 10% money back, and I'm just keep rolling it up. And I'm like, dude, I got some money I can park. I was living in Miami at the time. And I wanted to get into, benefiting from real estate. So I lent to JWB. It was a great experience, right? Like a 1.5, it was a 2-year note that they paid back in like a little bit over a year. I made 10%. And I really wasn't an educated investor at that point. And I was just like, all right, well, I made my money. I'm going to take it out. I'm going to see what I do with it. And then fast forward to 2019, I'm living in Jacksonville at this time. I am starting my own business, right? So I'm an entrepreneur, and I've got this marketing agency where we do content strategy that is community focused, right? Like all of our strategies have to do with creating community. And I was talking to, at this point, my friend who was introduced me to JWB. His wife had started an insurance company, and she was doing all their work. So she invited me to one of their events. I talked to Gregg, who's the co-founder, and he was trying to get into content. And, he was struggling with creating a good marketing channel that could really showcase their company in the light that it really deserves. And I started pitching this idea of like, man, you've got all these clients that you guys have been servicing for the last 14 years. You're these category kings of this, vertically integrated rental property investing thing. I think that you'd be better off by, instead of you trying to be Superman and teach everybody everything you're doing, just kind of make the Avengers and start this show that showcases all your clientele and their journeys and the things that they've learned. They're all experts in their own rights and a bunch of things. And it took him a little while to figure it out, but he got it, right? Like he bought into it. So early 2020, January 2020, we started this Not Your Average Investor show. And by end of 2020, we're having like a fan appreciation show where we had just like client after client coming on talking about how like this was so valuable to them, and how they felt they were part of a community, and how this is why they're doing business with JWB. And that's kind of how I got involved. But as a real estate investor, I got to co-host the show, right? So like I walked in as a really, really green, don't know much, hadn't even read Rich Dad Poor Dad type stuff, right? And started hosting the show and just kind of like learning through others and seeing everybody's journey, and getting into like all these different walks of life, as I'm sure you've been able to do since you're interviewing all these different people, right? Like you hear all these stories and you get this like cognitive bias going of just like seeing is believing. And it made me really realize, number one, being in the guts of the machine, right? Like I didn't at that time, I didn't know much about real estate, but I know what makes a good company, right? Like I'm a business guy. I know how to market. Like I know how to sell. I know what drives value, and getting to know their operation as an insider really opened up my eyes. And I started seeing this like operation that when I joined, to be their marketing guy, they had like 80 people, and now they got like 120, and they've got this like data flywheel that they make all their decisions on. And they got this incredible corporate culture where, like you walk in the building and you can feel it. So I started being like, oh man, what's going on here? Then I started realizing that a bunch of businesses that do business with them end up having them kind of like as a first client, and then go on to build their own kind of like businesses based on the stuff they learned. So, got me really optimistic about my marketing company. And as I started seeing this, and then I started learning as somebody that had just moved to Jacksonville, the secret sauce of Jacksonville, right? Like I lived in Miami from 2009 to 2018. And I saw this like city that had all these things, but didn't really have an urban core that had come online. And then I saw the urban core come online and what it's done to real estate prices and lifestyle and all these different things. And I was seeing all this, and I was really involved in economic development. So I was seeing all this like secret sauce happening that Jacksonville, I started living the idea that it's really poised for, right? So this like big upside in a market that's kind of under the radar unless you're a savvy real estate investor. And then, I just started really understanding the mechanics of it all, right? Like the idea that the beauty of leverage, right? The 5 profit centers of rental property investing, like all, I kind of backed into it. I feel like most real estate investors come in like understanding just the numbers of the deal. I kind of backed into it, understanding the macro economy of it all. And then getting into like the actual dynamics of the deal. And once all that started making sense to me, man, I've gone all in, right? Like I've purchased 3 rental properties from them in the last year. And I have pull forward the demand of where I want it to be as far as my portfolio at the end of the day, of like how much real estate I want, how much stocks, how much blah, blah, blah. I've pulled it forward into real estate for right now because, and I'm, I probably I would say like 70% of my net worth is right now in maybe more, probably about 80% of my net worth is now in real estate, because I've recognized this like power of where this market is going, what the compounding interest is going to be, and like the beauty of like buying and holding a cash flowing property, and how the 5 profit centers pay in. And I wanted to like get my chips into that pot as soon as possible. And then as an entrepreneur, as an investor, then I can start diversifying and doing other things, knowing that this thing is really like where I want to be early, so that it can really, get me to where I want to be in 30 years. So that's been the journey, man. I now have a little portfolio of 3 properties, and I'm like, I'm kind of like their official hype man, because I do all their marketing, but I'm just very generally become like their biggest fan. and these folks that, invest with them have all become my like really, really good friends. So it's like, it's become my life. It's been an interesting journey, man.
Okay, cool. So what are these 5 profit centers of rental investing that you're talking about?
Well, so what I knew of rental property investing before was like, stories from friends of mine, right? Like I had friends that had like done this themselves, and it was always kind of like very cash flow focused, right? Like I got this it was either really like cash flow focused in the sense of just like I can rent it out for whatever and I paid this much and now I'm getting this, but at the end of the day I get taxed and all these different things happen. So where does the money really go? Or it was just like, I'm in this like upside down market that isn't cash flowing and I'm just like betting on appreciation kind of thing, right? Like I was just thinking that, the Miami world is just like I call it like the $1,000 poker table, right? Or like the $1,000 blackjack table where it's like, you really go all in on one property and you're betting on this like short-term appreciation. What I learned was that in buy and hold, long-term thinking rental property investing, there are these 5 profit centers, right? There is cash flow. And to the point of this show, right? Like the cash flow makes it scalable. If you are at least breaking even or making like 20, $50, right? Or like 300, whatever per month in a rental property, then you're able to like grow a portfolio of them without just always going in the negative every single month, without really worrying about this like short-term appreciation game. And once you get to about 3 of them, then you have kind of like when something bad's going in one of them, the other 2 are paying for that, right? So like it becomes very like scalable in that regard. And I realized that there's only a handful of cash flow markets in the US where, this thing makes sense. Right. And I don't, are you an NFL fan, Matt? So
Yeah, definitely.
yeah. So I think of it, I'm kind of like a draft nerd, right? I love like the draft and guys getting evaluated. I think of cash flow as like quarterback arm strength, right? Like every quarterback jumping from college to the NFL has to make every throw. But at a certain point, I really don't care if he can throw it through a garage door 100 yards out, right? Like they got to be accurate. They got to have good decision making. They got to be good leaders. So cash flow to me is like the entry to the dance, right? So once it's positive cash flowing, now you can look at these other profit centers. The other profit centers are debt pay down, right? This beautiful idea that worst comes to worst, I have a resident in place that is paying down a loan that I took out, that even though that stuff's going up, it's still lower than it's been historically in a long time, right? Like that's just like getting paid down. That's equity that you're accruing. There is tax savings, right? So like when you purchase a rental property, you can depreciate the value of the actual house, not the property. The property goes up in value, but the cost of the materials that have been used to build a house, you can depreciate over a certain amount of time. And that becomes a positive cash flow event without you laying out more cash, right? So it's like this like really attractive tax position where, it's taken away from your taxes without actually having to spend more money on the front end. Then there is hedging against inflation. That's kind of a complicated concept, but right now that inflation is really just running rampant. People really care about it. And it's essentially the idea that when you buy hard goods, you lock in your costs that are then going to go up, right? So like the house next door, when it gets remodeled or built, it's going to get remodeled or built at the prices of today's lumber and today's concrete and glass and all these things that are going up, while your house was built at that locked in price. But it's gonna continue to like catch up to the appreciation of that internal cost throughout it, while you have that locked in. So it's kind of an abstract concept, but it's there. And the more that inflation is a thing, the more people are really going to like tune into it. And then there's the big one. Then there's the appreciation thing, which people like myself used to get really wrong, because I used to think of appreciation in the short term, right? Like everybody got kicked in the teeth in 2008, thinking that homes always go up. And, it's kind of true, right? Like they only went down in this one recession in like 60 years, 70 years, 100, right? Like they've only gone down twice in like 100 years. But that being said, that's not what you're in it for in the long run. In the long run, if you look at a house market, right? Like if you look at a local market, in a full market cycle, you will always see kind of like an average appreciation rate that has held true forever. Even if you look at, before the Great Recession and after the Great Recession, if you look at it in like a 25-year period, local markets still remained true to their average home price appreciation, right? So Jacksonville, out of all these cash flow markets that we talked about, right? There's a handful of them. It's like Kansas City and Birmingham and Cleveland and like these different places. Out of these cash flow positive markets, Jacksonville has the highest historical rate of home price appreciation, right? It's at like 4.6. And that's like 50% higher than the next one over. So if you look at throughout an entire market cycle, and you look at the way that these assets perform, and you look at it in like a pie chart, right? Like what you end up seeing is that, cash flow, debt pay down, and tax savings end up being like, it turns into like a Pac-Man figure, right? Like cash flow, debt pay down, and tax savings ends up being like the mouth of Pac-Man, and home price appreciation ends up being the Pac-Man himself, right? So like if you are buying and holding for a long cycle, that's where the majority of the return ends up coming from, as long as you're holding for a long time. So when you are looking to do it and you're a long-term investor, then you're really better off looking for the markets that have the highest rate of home price appreciation. Because when you are, it's one thing to buy cash, right? Like it still holds true in that regard when you think about it for a long time, but especially if you're going to finance it, right? Like if you're going to put 20, 25%, 30% down, then you get this beautiful effect of leverage, in the sense that like, if I'm putting down $20,000 on a $100,000 property, and that property is appreciating at 4.5%, then I'm going to get 4.5% on the entire thing, right? Like I'm getting 4.5% on the money I'm borrowing that isn't coming out of my pocket, on top of the money that I put down. And that's like this like beautiful leverage. So essentially that's like an extra like 16% that I'm getting if I'm putting 25% down, that you just don't find in other asset classes, because you don't get that level of leverage. I can't like borrow, I can't put down $20 on a stock and borrow the 80 and then get the stock appreciation on the $100, right? So that's when it just, all of that stuff clicked for me, right? Like this idea of long-term buy and hold, the leverage that you get with the money. So that's what you asked me for, was the 5 profit centers. I'll shut up there.
All right. No, that's great. I really enjoy you adding some extra context and color around that. So it's really helpful. And I never really thought of that. It makes sense to find obviously a cash flow market, but then combine that with the strongest appreciation. Because when I was reading some articles, I read the average national appreciation rate is like 2%. Is that correct?
Something like that.
Yeah. It's not great. And then me and my wife own an apartment in Queens, New York, and that's definitely one of the ones like Miami, where we're paying every month to hold that property. It's not fun.
Yeah.
But totally understand what you're saying. So how long should an investor hold? Is it like as long as possible?
Oh, man, I think that's I'm going to give you the obvious, answer, right? Like it depends, right? But I do think that, I think it depends on the asset class that you're investing in, right? Like I think that if you're going into it for maximum wealth creation, then holding as long as possible is the move, right? Because then you're going to be able to like get through the short-term stuff with the positive cash flow. But at the end of the day, that home price appreciation kicks in long-term and continues to give. And what ends up happening is the idea that, you're going to have this wonderful cocktail in like 10 years of home price appreciation plus debt pay down, plus with your cash flow, whatever you're paying down to, is going to get to this point where you have a bunch of equity in this home. And 2 things happen then. A, your rent, like you're taking home more cash flow, right? Because like now less is going to the mortgage and more is just coming to you. And B, once you have this equity in this home, you can refinance, right? Like if you refinance and you take that equity out, you can now take money that you're borrowing at, let's say, in the future, maybe 5%, and you can put that money to work at 10%. Or as a lot of our, the JWB Not Your Average Investor Show community has done, they've just like, refinance, pulled out $100,000 and bought 2 more properties, right? So like these properties start to like allow you to buy more properties without having to put more money in, if you're buying and holding for a long time. And if you think about that long term in 30 years, right? Like I can just get like real judicious about putting money in the stock market in my 401k and hoping that that thing grows, or I can like try to build an army of like 20 rental properties that by the time I'm ready to retire, you know, they're paid down, and all the rent that's like $2,000 to $3,000 a month, all of that's coming into my pocket. That becomes a very stable cash flow environment for me to live my retirement, right? Like I'm looking at my dad right now, who's done very well in his career, and he's just all in on the stock market. And now that he's 76 and the stock market just took a dump, he's like, every quarter, he's like, dude, I don't know what I can spend right now. Right. Like I made millions of dollars in my career, but now the cash flow that it's spitting out goes up and down. Whereas like, if I have 10 or 20 rental properties if he would have done that in rental properties, he'd be chilling with like a pretty steady, base income plus or minus vacancy in one or two of them kind of thing. Right. So that's the mindset of like holding for a long time, is that they pay for more houses themselves. And when you get to that point where you really need the cash flow, it's much more stable.
Okay, definitely. Yeah. And I think overall, it's kind of the reason most of us get into real estate is you just have more control. Like you said, you can decide like what price you're buying at. Well, obviously you can wait for a price to go down on a stock or something. I just always feel like there's no control. It's like, oh, why did the price go down? Well, it's because all the executives left and it's going under, and there's a reason maybe. And anyway, I actually got I'm a chartered financial analyst, so I'm supposed to be the one that looks at it and says, no, the market's stupid, and I'm the smartest guy in the room. But I found the smartest guy in the room leaves the room and goes invest in real estate. So that's what I'm doing.
I've met more and more guys like you recently, man. Like it's real, right? Like that, the volatility of the stock market's real. That the combination of like understanding this thing plus seeing my dad live it out has really impacted the way that I see where I want my retirement dollars coming from when I'm in my 70s. So, like I'm a big believer in, if you can control as much of the environment as you can, then you're going to want to do that. And as far as like stocks go, dude, like Elon Musk says one tweet and it could affect the stock of 30 companies. Like we're moving into this world where a Reddit subgroup could completely ruin your retirement account, right? Like it's getting that stuff's getting really, really scary. And it also makes me think of like, if you're losing control there, where can you control it? And that's the thing that I find really attractive about JWB's business model. Like they are, they're fully vertically integrated. So there's like turnkey companies that are, they'll sell you the deal, right? But they're basically like sourcing a deal, and they're one part realtor and then give you a recommendation to a property manager, and they give it to you like wrapped up. But that's what they control. That's turnkey. These guys, and they'll go to like different markets. So you have options in different markets, which is attractive, right? Because maybe you want to be in one cash flow market and one high appreciation market, depending on your thing. These guys have just decided to just go 1 inch wide and a mile deep into Jacksonville, so that in-house they acquire the land, they acquire either vacant land, which they have a ton of, infill lots, or they acquire the properties. They have the construction in-house, so they control the quality of construction and the turnaround. They have built one of the biggest property management companies in America that manages 4,500 properties, all in these same neighborhoods, so that they have this like army of service people that are always around, right? And like when a hurricane comes or whatever, they have the buying power to be like, no, I need you working on my property right now. They have these portfolio managers that you take a call once a month with, and they're just telling you where the money's going, what to do next. They've built out like the tech stack for you to see it. And then on top of that, that's all like contained inside the property. But because they're here and they're here long term, they're like 38-year-old guys that want their 6-year-old kid to graduate college and move back to Jacksonville, because Jacksonville is the best city to like live, work, and make money, right? So they've bought 19 blocks of downtown Jacksonville, and they're now totally going really hard at this urban core, because they know that they own property. Them and their clients own 4,500 properties around the urban core. So if they can develop the urban core, to raise median income levels, then everybody's going to end up winning in a really sustainable fashion in a long-term play, right? So that's why we say that they're completely vertically integrated, because no other company is just not working on like, yeah, your deal's going to go well, but we're working on the macroeconomics of like upside for you. Like that blows my mind. So like that level of control I've never seen in a wealth creation vehicle.
Yeah, that's definitely really interesting. Eventually, they'll just control the entire city, it sounds like.
Dude, I would not be surprised. Like I've talked to Alex, one of the co-founders, who's like the Steve Jobs of the group. I wouldn't be surprised if he's like mayor of Jacksonville or governor of Florida at some point, right? Because like the stuff that they're doing is just like at a scale unlike anything that I've ever seen.
Okay, that's very interesting. So if I was wanting to invest with JWB, how much capital would I need to bring to the table?
The homes right now that Jacksonville has like really appreciated in the last couple of years, right? So since I have been like running this show, homes have been somewhere like the median price of a Jacksonville property was like the market was somewhere around like low 200s, and now it's right around 300. And their median price of homes have gone from about like 140 to right around 200, right? So if you're thinking about it, right? So like, let's say it's like 200 to 250. If you're thinking about it, you're going to want to put somewhere between 20% to 30% down, which puts you, somewhere in the like the 50 to 75 grand, plus closing costs and all these, and like you want probably about like 3 months of expenses of reserves, and they'll talk you through all that stuff, right? So I guess the right answer is I think somewhere between like 60 to 80 to be like real comfortable to pick up a property. The last one I picked up, I'll tell you right now, I put 25% down. It was a $225,000 property, and down payment plus closing costs ended up right around 60.
Okay, and so purchasing that property, how much cash flow, like after paying the mortgage, and I don't know if it's possible to tell me this, but and also after paying like the capex required to reset the unit after each tenant leaves, how much are you really cash flowing on average per month?
So right now to start, I'm cash flowing like right around like $50, right? It's not the cash flow short term that I'm into it, but I'm having an IRR year of like 12%.
Okay. Got it. Interesting. Is that for that specific property, or is that just most properties?
I think it's somewhere right around there, man. So like if I would have put down 30%, I'd cash flow a little bit more, right? Like if I, stuff like that, like it changes based on how much you put down. But yeah, right now there, it's kind of like at an IRR of like 12% if you're looking at it over like about 10 years. And yeah, it's like on a 10-year timeline, that IRR.
Got it. Okay. And does JWB manage, like, do they have homes that are already available in inventory where I just go? Okay.
Yeah. So they do, right? That's been one of the things that's become obvious to us, is that like most of these turnkey providers, because they're not vertically integrated, they're like looking for deals and then selling them to you. These guys have been like land banking for the last 8 years preparing for this. So they've consistently had homes available. Like if you go to jwbmakeseateasy.com and you book a call, like you get on the call with them and they will, they have inventory available right now that when you buy it, month one is already positive cash flow for you.
Okay, got it. Yeah, one of my other questions was, do they do new builds? You already answered that because you said they purchase infill lots, but what's the kind of the mix between new builds and buying existing ones and renovating them?
Yeah, it's whatever the market bears, right? So like there was a while where it was all new builds because during like back end of COVID, inventory was done, right? Like so it was whatever they were building. They're the 10,000 pound gorilla here, right? So they're able to then mobilize and acquire a bunch of other properties. So they generally have a mix of renos and new builds, but that goes up and down, depending on what the market has available. They've just done a really good job at like being able predict what's coming and have stuff available for folks.
Okay.
And I don't know if you want me to kind of talk about like, so at the end, the difference between the new builds and the renovations, right? So like every renovation they bring up to a certain standard where there's like no deferred like big maintenance item that's happening. And then the new builds, of course, are new builds, right? They are bringing to the market all their homes. At the end of the day, you're buying that IRR and that cash flow, right? So like whichever way you get there, new builds generally have lower maintenance on the front end and a little bit lower insurance, but the purchase price is a little higher. And and then like renos will have a little bit higher maintenance, a little bit higher insurance, but the price is lower. But at the end of the day, they'll all provide the same like level of like very comparable levels of cash flow and very comparable levels of IRR and a supremely like homogenous experience, right? Like their whole thing is just like, this is the most passive experience you can have, which basically results in like, you have this like concierge person that's just like making every call and making sure that everything's on top of everything. So just like once a month, you take like a 15-minute call. When all is good, it's like once a month, 15-minute call, you know, everything that's happening. You have this like interface that tells you where every dollar has gone. And in hard times, like right now I'm going through an eviction, I have like about a once a week call and she's just taking care of everything and letting me know everything that's happening. And, you know, again, it's just kind of like, all right, well, I got to cut a check here, or I got to, you know, like I got to cut a check there, but it's super, super passive. And like the first time that I started experiencing this, Mason, like I get on and it's, you know, they're like late 20s, super like enthusiastic, bubbly people. Like, I don't know if you ever been to an In-N-Out, like, you know how like in every In-N-Out, everybody there's like past class president, they're like super pumped to give you a burger. Like it's that, but like managing your money. Like the first time I took a call with them, I was like, is this what it feels like to be rich? Like just like really talented people helping me make money. Like, while I'm not doing it's an interesting experience because their culture is so good, man. It's cool.
Okay, cool.
Yeah.
So they are actually managing the property and coordinating with contractors, say if like the toilet needs to be replaced or whatever.
Yeah.
All that stuff.
Yeah. Everything, man. Everything. And like, it's to a level where they invest heavily in these 4 neighborhoods that surround downtown, right? And they have 4,500 properties, right? So anything is happening at one of they really care about the resident experience, right? Because they realize that what drives profitability in rental property investing is occupancy, right? So their property management is designed to keep the resident there. So they do a couple of things that most property management companies don't, because they're not real estate investors. They're just making money on property management. These guys make money on the fact that like, if you get 1, you're going to get 4, right? So they sign these like a minimum 2 to 3 year lease, right? That reduces the amount of turnovers you get, which is where kind of your costs come out. They're very, very proactive about renewal, right? Like their average stay is somewhere about like 4.5 years, and their average renewal rate is about like 70%. So they're like really proactive, and they, you know, their service team, when they're talking to residents, and they call them residents because they stay for a long time, is always looking for hey, we're going to renew you at this thing. And they're like always, they've figured out this idea of like carrots of, hey, if you renew for 3 years, then your rent's not going to go up for the first year, and it's only going to go up this much the last year, which, you know, as the property owner, you're like, oh, wait a minute, don't I want maximum rent? But, you know, like the difference between getting an extra $50 in rent for 1 year versus a $6,000 turn is, you know, like you want to avoid those turns as much as possible, right? So like it's all made to maximize the ROI for the investor. And then on top of that, because they have this like really high density of properties all in the same areas, a couple of things happen. They've built out this like data flywheel of just like what everything costs and what the experience is like. Like they know exactly like their numbers on their performance on like maintenance rates and, you know, and vacancy and whatever are exact to what is happening that has happened around them 4,500 times. Is not just like, hey, this is the industry standard, right? So like very, very exact numbers. And 2, because they have so many properties in the same place, they just always have a service provider in the area. So like a toilet breaks, and the chances are that the plumber is probably down street working on something else, right? So like it ends up being a really, really good experience that allows them to focus their efforts on on renewals, right? So like people think, should I have a periodic inspection of the home? They started doing that. And what they realize is like when you have these like inspections, they know what's happening, right? So they fix whatever needs to be fixed and they put a Band-Aid on it. Whereas if you just like have a bunch of providers in the area and they're like trained to look for like telltale signs of like something's off, like lawn is too big, or they see something happening, they can always just kind of like stop by and spot things and really like catch the stuff that costs money in the long run, without increasing, extra resources of like a pointless home inspection. And instead they devote those resources to when a home is vacant and they're like showing it, they devote the resources to like making sure that in between every visit for like a potential resident, someone's going in there and making sure like the toilet doesn't stink, that something is not a clutter, right? So like they really drive the metrics that actually increase ROI because they themselves own 300 properties within this lot of things. So they're making all the property management decisions from an investor standpoint, not a property management company standpoint. So it's super powerful.
Okay. And did they ever look at like smaller multifamily, like duplex or fourplex or up from there?
So they do townhomes. So what happens in Jacksonville is that multifamilies, in general, they have these like requirements, right? Of like the neighborhoods that they invest in have to have this like certain amount of rental demand, a certain amount of price point, like to that, they got to be within a 50-minute driving distance of a certain amount of jobs. And then another one of the things that they look at is that it can have crime in the neighborhood, but it can't have violent crime, right? Because then that makes the property management much more difficult. So most of the multifamily stuff in Jacksonville is in these neighborhoods that don't meet that requirement, right? So like they do property manage and they do certain things. So they offer property management as well for people that have properties, but they've got to be, within a certain like parameter of the neighborhoods that exist that allow them to property manage the way that it should. And they have in the stuff that they do offer like some townhomes. So like, yes, smaller multifamily in the realm of like townhomes do exist within these neighborhoods and portfolios. And they manage multifamilies that are a little bit bigger than that, but they don't generally like sell them as investments. They will just like take over the management and do that for people.
Okay. That's helpful to understand. Yeah, got it. So I think we've hit on most of the questions. I forgot to mention in the intro that you're also the host of the B2B Community Builder show, right? Can you talk about that a little bit?
Man, I would love to, right? Like I just that's my company's show, right? So like what I do for JWB, which is host the Not Your Average Investor show, is the proof of concept of what I believe in. It's this idea that if you're going to make content, right? Like, and you're going to try to like build an audience, the most powerful form of an audience is an actual community, right? So like, and our thesis, which is what we do with the Not Your Average Investor show and the B2B Community Builder show, is that right now, what you and I are doing is awesome because we're building a relationship, right? Like we're getting to know each other. You're bringing a lot of value to my life by putting me on your stage. And then so we're building a one-on-one relationship. And then you're going to publish this thing to podcast or YouTube or where you publish it. And that's going to build relationships one-to-many that people can watch. If you do it in a live format, then you can do that one-to-one relationship with a key person. You can do the one-to-many relationship when you publish, but you can also build relationships one-to-few with the folks that want to show up to it, right? So you're able to just like build deeper relationships with the people that are really, really paying attention to what you're doing. And you're able to have more feedback from that proximity, right? Like if someone's live here right now and they're asking a clarifying question, like they didn't really understand how I explained why it's valuable to be vertically integrated, they can like key in, and then that gives you and I the ability to like give it a better answer, right? Like, so you get to add more value. So like for me, I'm just really a believer that the future of business development and is community creation, right? Like as the world gets more and more digital, the smaller businesses are either gonna lose to, so like, for example, realtors, right? Like you're either going to lose to Zillow, or you have built such a strong community of people that can vouch for you that people are going to see the value of like doing business with you versus a national syndicated giant, right? So the B2B community builder show is basically just like exploring the things that make that work, and what, like it's a lot of like marketing and business growth and leadership concepts so that you're able to like build this community around your business. But the Not Your Average Investor show is like the living proof of why this stuff works, because we have like 60 to 100 folks that show up every single week to our shows that have become like real tight, all know each other. We've been like hosting events across the country. We've had events in like Seattle and like Northern California, Denver and Pittsburgh and Jacksonville. Well, we'll get like 20 to 70 people that show up to like meet each other because they're all friends on Zoom, right? So it just becomes like a really powerful tool of enabling people to, make their own best decisions and have new friends, right? That are in this real estate crazy game that we all are in, that we need some help with.
Okay. Yeah, I could probably just go and check out how you do it, but I'm just curious, how do y'all do the live stream? Is it like on Facebook or something, or how does that work?
Yeah, man. We do a Zoom webinar, right? And then we stream the Zoom webinar to our Facebook group, right? But the key is that when you're doing this stuff, right, like what creates this like sense of community is that I see the stage as like the center of a community, right? Like most communities, if you think about it, they have some kind of stage where like the people that are where members can share the value of what they have to offer to other members, right? So the stage is the bullseye of the community, and the person hosting and their guests, that's like, the queen for the day, right? Of the community. Then the folks that are around that show up to the live webinar on Zoom and are able to chat and ask Q&A and stuff like that. That's like the court, right? Like that's the cool club that's hanging out. Then there's another layer out. That's folks that tune in live to the live stream. That's kind of another layer out. They don't feel as close to us. They're not like talking to us directly, but they can comment and we can comment back and whatever. And then there's the content that we publish out, right? So like, I'm always thinking of just like, man, if you're out here, what's the easiest way for me to give you a path to come closer to me so that we can actually be friends, right? So like, if you watch a little piece of micro content, like, oh, that's interesting, man, I'm gonna tune into the podcast and listen to the whole thing. Then you tune into the podcast and you listen to the whole thing, and then you're like, oh man, there's people that are actually there that are asking the questions that I have right now. Maybe I want to show up one day. So one day they show up and they get there and they realize that all these folks are friends and they make a habit out of it. So that person decides to make a habit out of it. And, they get comfortable enough where they start contributing, and they contribute enough where they get a nickname inside of the community. And now they feel like they're part owner of it. And then one day, like they get to be interviewed also because they've learned so much that they've applied some of the stuff. And now they're at the top of it. So that was a long answer to the idea that we keep it real simple, dude. We do it in Zoom, and we live stream, but we really pay attention to the folks that show up live for the Zoom event, and really we cater to them, because that's like the magnet, right? Like the idea of hearing your name said during the program, having your question answered during the program, feeling like you're a part of the content creation is what drives like ownership of it and loyalty and trust.
Okay. Yeah, that's very interesting. It's helpful. And so I think that I saw on your LinkedIn there's an event coming up, so people will register for the Zoom. Mm-hmm. And that's how they can attend the Zoom webinar, right?
Yeah. And we tell people that they register, and it just kind of goes on your calendar. So it's like you can register, it goes on your calendar. If you're free for the Not Your Average Investor show on like a Tuesday or Thursday at 12:30, you're going to get that ding, like it's happening. If you like the headline, you like what we're talking about, right? Like, I don't know when this podcast comes out, but this week we're talking about this idea that Wall Street is buying a bunch of single family homes, and is that good or bad for the rental property investor, right? So like, if you like the subject, you got a question about it, show up and you can ask a question. If you don't, disregard it. You can listen to it on the podcast and you drive home whenever you want. But that's kind of the value prop, right? It's like, we're always here if you want to ask a question. And if you're not, you can always listen to it on the podcast. And the day that you have a question, we're here to answer all the toughest questions, right? So yeah, you make it easy.
Okay. Yeah. The only thing I would think is, how much time do you allocate to doing that? Because And obviously, I guess you could have like a set time, like here's our Q&A session, and eventually you have to cut off the questions. Otherwise, we'll be there all day answering questions, right? So how do y'all do that?
So it's kind of two questions, right? Like I'm hearing, yes. Do we have a time limit? Totally. Do we go an hour and a half sometimes because the conversation's so good? We do, right? But like we generally don't go over an hour. The other question is this idea, right? It's a lot easier to have a bunch of podcast interviews in like 4 hours and then publish them over the next month, right? It's harder to show up same day, same time of the week, and like be real consistent about it. What I tell business owners is that what else are you doing with that time, right? Like what is more valuable than having, as a business owner, the person that has the idea of the value that you provide and you're passionate about what you're doing, right? Like what's more valuable than the ability to like build relationships with the people that most use your service, get that feedback, create content that is words coming out of your mouth that can then now scale across the internet, right? Like most business owners will they'll try to like, they have like one great salesperson. They're looking for a bunch of other salespeople like that. Why not just you be the person that has the messaging and you get a bunch of people that aren't really salespeople. They're people that want to help and they can use your words because they're seeing them and they can offer them to clients and whatnot to scale your message and just create this like sense of trust and not like, I like to say that relationships are much more valuable than transactions, right? So like you just got to find a way to build more, better, deeper relationships. And this ability of like having your own press conference once a week where you can either use it to highlight somebody else because your clientele really wants to meet this person and hear from them, or show up and answer questions at large is just a really, really valuable kind of like feedback loop, relationship growth thing, right? Like seeing your face and talking to you in person once a week, people will, get to know you and get to trust you. And it creates all the marketing content and all the strategy that your sales and marketing ends up needing. And that's why it's worth spending the time to do it. And then, like my company, we do the back end stuff. Like we make it so that, you show up and it's ready to go and you're just kind of spending like 2-3 hours a week doing it. But even if you're not hiring somebody like me to do it, I just think it's the most powerful form of business development and like devoting your resources and your time to like figuring out how to like for you, maybe like start with once a month, right? Like if you do a live version of this thing, like once a month, that allows anybody that's a big fan of the show to just be like, you know what, man, I've always wanted to ask Mason an actual question. I'm going to show up to this thing. And you just start getting this like feedback from people and you start getting to really, really know them, which then makes you better at providing the content and the solutions that they need.
Okay. Yeah, it sounds like there's like multiple benefits all bundled up because you're going to create that podcast episode anyway. So you might as well also layer in the ability to connect with people. And I totally understand what you're saying because a lot of businesses, arguably maybe every business, could be boiled down to a commodity. And so how do people transact? It's based on relationships. So
100%, yeah. Man. I like to say that relationships are the atomic unit of business, right? So like everything is built, like it's your relationship with your client, it's your relationship with your employees, it's your employees' relationship with their clients, it's their relationships with each other, right? So like if you can really just like dive into the idea of strengthening those relationships, be it through something like this motion of being available to people or corporate culture, right? Like those are the things that make really compelling businesses happen. And I, be perfectly honest, I learned that from JWB. So.
Okay, great. Well, yeah, I know we're coming up on a hard stop for you. So what's the best way for listeners to get in touch with you or to learn more about JWB, or what's the next steps they should take?
Yeah. I think that they should go to jwbmakeseateasy.com, right? Because that's their thing. It's like making rental property investing easy for people. jwbmakeseateasy.com. And there they can find out all the information that they want on JWB. And check that out. And if they want to join us on the show, there's information there to like join us on the show as well, or check out the show on iTunes or whatever. I think it's a good time. It's kind of like a buddy comedy, informational session. Cause we have a real good time with it. So I would love to meet them. You person that's been hanging out with us, I would love to meet you, right? Like I want to be your friend. And the last thing that I would like to say is, Mason, you do a great job with this podcast, man. And so like, if you've been listening to Mason for, if today was good, if you've listened to him a couple of times and you haven't like, just like gone in and given him a review, like just take a second, all you have to do is like click into the iPhone app and hit 5 stars. You don't even have to write anything. If you want to be real cool about it, just write a little review about what you're getting from this thing, share it with a friend, right? Like, content creators, this is a labor of love, and I can tell by the hard work that Mason puts into it that he like loves what he's doing. So give him a hand. This is how people find the show and help him help more people. So give him that. I would say do that first.
Thank you. Yes, definitely encourage that. And I think a lot of people, listeners, may not understand what goes into it. The whole operation of running a podcast and everything like that. So,
it's an operation.
Yeah, but this has definitely been inspirational. I definitely need to be considering when I'm going to do my first live stream and all that. So.
Yeah, buddy. I like it.
All right. Perfect. Well, thanks a lot for coming on the show. This was great.
Thank you, man. I really listen. I think that there's plenty of bad things that people like to talk about of the internet, but the only way that we make it a great place, and we're not going backwards from it, is to bring the most value that you have to offer and share it with others, right, man? So like what you're doing, sharing and educating folks on real estate is a absolute, like what we need. We need to like shine a light on the good stuff. So it's a real honor for you to shine your light on me, man. So I appreciate you letting me on here.
All right, that's another episode of Scalable Real Estate Investing. Thank you for tuning in. Please be sure to leave a review and subscribe on whatever channel you're using to listen or watch these episodes. And also be sure to go to scalablerealestateinvesting.com, scroll to the bottom, and fill out the form to sign up for our email. And you could also reach me directly at mason@scalablerealestateinvesting.com. That's MASON at scalablerealestateinvesting.com. If you'd like to get in touch with me to either partner on deals or even be considered to do your own episode on this podcast. Thanks again, and have a great day.